All right, we have Chapter 7, Question 19a. All right, for Question 19a, we were given a bunch of information for a company called Surplus Direct for the year ended September 30th, 2019. Using this information provided, we are to create a multi-step income statement with the assumption that 60% of expenses are for selling and 40%, the balance, are for administrative. As always, the first key items on our statement are the headings. So we've got the company name being Surplus Direct. It's an income statement for the year ended September 30th, 2019. The first section, again, is always your revenue. So in this situation, we want to record our sales revenue being $90,000. Then you'll notice we have sales discounts and returns, which are items that we need to subtract from our sales revenue. So we have sales returns of 50, sales discounts of 5,000 for a net reduction of 5,050. This results in a few items, being a net sales of 84,950. Our cost of goods sold we pull in of 26,000 for a gross profit of $58,950. The next section we want to do is our operating expenses. In the first section, we want to always list is our selling expenses. Those are typically costs incurred to sell the items to our customers versus just general overhead to run the organization. In order to calculate the amounts that are attributed to selling expenses, we are told to assume that only a portion are selling, being 60% of our general expense items. In this situation, we have 4 expense items, being maintenance, rent, salaries, and supplies. So for this situation, if we take 60% of each of those 4 items, we have a total selling expense of $7,560, being 60% of each component. The balance can be said then belongs to administration. So therefore the 1,200 plus the 800 needs to equal the total as per our trial balance information. So therefore we have total administrative expenses of $5,040. Our income from operations then becomes $46,350 after reducing our gross profit by $12,600 for our total expenses. Items such as interest or gain on sale of other equipment or assets is typically considered other income expenses if that's not what you're primarily in business for. So in this situation, we have a few other items to add to the bottom, being other income and expenses. So we have interest revenue, dollars coming in, and interest expense, dollars being paid out, likely for a debt of some sort. This results in a net income for this organization of $46,120 after all things said and equal.